up? What up? How's everybody doing, folks? Folks, how's everybody doing? Thank you for being here. Really appreciate that, folks. Thank you for joining me. This is going to be another episode of the Trading Quotes playlist. This is on my YouTube channel, at Sheds Trading. I'm doing the whole book for free. As you know, I like to make my stuff free, especially when I'm, put out a new book. And I have published the Trading Journal this year, so I've been going on. And I'm recording, one chapter at a time. And so there's one quote a day, 52 weeks a year, and then I summarize my favorite quotes every 3 months. So we're going to do the second quarterly wrap up. It's called Favorite Quotes Part 2. You see favorite quotes here, Part 1, and then I recorded weeks 14 all the way through 26. I'm going to do the whole book for free. While you're here, check out Trading Encyclopedia. 3-minute videos designed to teach you professional TA, candlestick theory, classical charting. Check out the interviews. I've got great interviews in the long-form interview series. And really just soak up the stuff that I have here for you. Of course, I'm on Twitter at BigCheds and Bitcoin Live, where I'm a founding analyst. So again, we're going to take a look at the trading quotes. This is Favorite Quotes Part 2. Let's get right into it. So basically, I'm going to read the quote, I'm going to kind of riff on it and kind of tell you what I think. And the idea here is these are important topics, risk management, emotional management, just things that are critical to you, surviving the long game, and sticking around as a trader. So let's jump right in. All of your biggest trading losses were once small losses screaming to be cut. It is so hard to cut that loss and move on. It's really, really hard because you think you had a good idea and then, it fails and you think, okay, well, surely I wasn't wrong. I was just early or I was only slightly wrong. Let me stick with it. Let me readjust. And rather than taking a small loss, we tend to double down or we just hold on to that, trading idea, and it blows up. It balloons into a bigger loser. And if you can make that hard decision and admit that you were wrong and take that loss, you're going to be in a much better position going forward because you're not fighting momentum. You're not fighting the trend. Right? When your trading idea fails, that's a big momentum clue, right? If you thought it was a breakout and you bought because there was a breakout, if the price failed to hold, there's no momentum there. The whole reason that you started your trading idea, it's over, it's gone. So you want to move on, you want to be prudent and live to fight another day, because these small losses, they will grow. And every major loss, you've ever taken, it was once a small loss. So you just said, nah, I'm not going to cut it. I don't need to sell here, right? So accept the minor loss and then move on, all right? This is interesting. This is like, emotional management, but really psychology and market sentiment. Everyone wants a pullback until it actually comes. So there's a chart that breaks out. You've got all sorts of FOMO. You really wish you bought it. And then it does some nasty retracement and it drops all the way back down to like a prior breakout level. Now, instead of buying, you're afraid. The pullback, what you said, oh, I would love to buy it. I would love to buy it at 100. I'd love to buy it at whatever the number is. But then when it gets back there, you question yourself. It's because this is why it's so easy to buy tops and sell bottoms because we follow momentum. We follow the herd. We're social animals, right? We follow the social momentum. So when it's super hot and everyone loves it, man, I wish I had it. A little bit of a retracement, a little bit of a consolidation. Now everyone is freaking out and you don't want to buy again, even though it's at that major area of interest. So you want to make sure you're not overreacting to price movements. You're understanding how to contextualize them. And how do you do that? Well, you're trading charts that you understand, that that you have muscle memory on. That's going to allow you to stay grounded. It's going to allow you to take advantage of these moves when other market participants are panicking, right? It can help you to have a smaller position size. You may have a really good idea, but when the price gets there, you're like, oh, maybe I don't want to buy here. Maybe I was wrong. Well, you loved it before. What happened now, right? Just play the chart, play the price, versus the key level. Make your plan, fire your shot, and let it play out, okay? This is interesting, and I was having a debate with someone recently. People get really worked up when someone disagrees with them, especially if they have like a large amount of money in play. So imagine you've got a very large position. and you're long and you really believe it, and you're in the chat rooms and you're reading news articles or whatever, and you're doing this, fundamental analysis, or even a good chart, whatever reason, maybe technical, it's a good chart. But someone else comes with a different idea. I'm going to short it. I don't like it. I think it's going down. You get offended. Why be offended? Embrace that, right? You can't have everyone on the same side of a trade. You can't have everyone thinking that the price is moving in a certain direction, because it would never move, right? If everyone agreed on what the price should be, it would just be that price. There'd be no disagreement. And the disagreements we have is what makes functioning markets. So we really should embrace it. We really should embrace the disagreement, right? This quarrel means that we have a functioning market. And there might be an opportunity for us to make some profit. So we should embrace that, right? We want to embrace the debate and not get offended or worked up when other people have a different view than us. Like, it's okay. We want that. We need that, right? This is one of my more favorite quotes, one of my more famous quotes, and other people have said this as well. But, if you find yourself, when you're so excited about your trade, that you take a screenshot to send to your buddy, that's probably when you should sell. And it's one of those things. Before I put out this quote for the first time back in like 2020 or something, I've been sending all these screenshots to my friends. And then I kept looking back and like, wait a minute, those were all tops. And it's like you send the screenshot because you're almost surprised at how much strength there is. Or if it's a short, how much weakness, right? You're almost surprised at how well the trade is doing. That's because it's done some type of it's some kind of an overreaction move. Like, it moved too far, too fast. And part of you is sensing, whoa, like this is abnormal. And so it's just a good general rule of thumb. If you catch yourself doing this, just take a little profit. You don't have to trim the whole position. Just take a little profit. It will make the rest of it easier to manage, and you'll pay yourself for a good idea. But this is a very big sentiment tell. And this is something I think pretty much any trader can relate to. So, this is a good opportunity to take profit. And even if you don't want to sell, right, move your stop loss up in a long trade. Move your trailing stop loss up, whatever your method is, and pay yourself for a good idea, right? These volatile moves can swing back and forth like a pendulum, right? And if you don't take advantage of that, you're going to be left thinking, I can't believe I didn't trade. All I did was make this lousy screenshot. That's all I did. I took a lousy screenshot, and that's all I did. That's all I've got. So take profit and reward yourself for a good idea. It's really important. You got to reward yourself. No one else is going to reward you. Okay, you have to do it. This is a huge tell. Okay, if you buy something and you immediately feel uncomfortable, you probably have too much money in that play, right? As soon as you enter the play, you become nervous, right? And that's something wrong. That's your spidey sense triggering. Wait a minute. What am I doing? Why did I just buy this, right? So most of the time, you probably just have too large a position, right? Because for most people, right, smaller positions are easier to manage, right? So that's number one. Make sure your position size proper. And also, you probably don't have conviction to execute your plan, to execute your stop loss, to manage the position if things go wrong. Make sure you have confidence. You might need to have a smaller position, but have a very well thought out plan. Know how to manage it if things don't go right, and then just fire your shot. Listen to your intuition. Pay very close attention when you have this feeling, and it's probably going to save you a lot of money in the long run. I've had this happen so many times, and I realized that I was over trading, I was revenge trading, I was FOMO trading, I was doing all these, bad styles or bad types of trading. This is a very, very big clue, and you should pay attention to it, okay? Now, a true chart technician, they can articulate both the bearish and bullish thesis. No blind spots, right? Now, it doesn't mean you want to look at every chart and say, I'm bullish and I'm bearish. Here's why, right? And then you're nothing, right? There's usually a cleaner read, right? And most of the time it's with the trend. And most of the time you can see the trend slowly strengthening or slowly weakening. But this is about checking yourself. This is about checking your own thesis. And, for example, take like a head and shoulders. If you think it's a head and shoulders top, which is a reversal pattern, and you're a bear, you can say, well, the bull thesis here would be a failed right shoulder and a continuation of the head and shoulders. So you're kind of always looking at what is the opposite of my thesis? Where's my thesis going to go wrong? What might the other thesis be? So rather than just coming in 100% blind challenge and say, wait a minute, what are other possibilities? You want to understand all the key pivots, all the key pivot points, all the key market structure, and just consider those alternative point of view. That way you have a better understanding of where to put your stop loss. And again, your stop loss is when your trading a thesis fails, when your trading idea fails. Okay? Now, there's some debate about this, but in my mind, there is no debate. With other people, though, and this is about classical charting, which is heavily based on just horizontal price structure, key support and resistance. But if you keep getting faked out, there is a decent chance you're trying to base your trade on a diagonal trend line rather than a horizontal zone. And as from these other lessons I've done, we remember that a trend line, the whole purpose of a trend line is to illuminate a trend, not a line. You don't trade on the line. The line shows you a general trend of price, and then you look for horizontal structure, higher lows, lower highs, something you can use, to manage your risk. But it's just so easy and tempting to just draw a diagonal line and say, oh, bottom, we broke this aggressively drawn diagonal. We broke this little line. The market doesn't care about your line, man. Like, you can draw a line to understand generally the trend, but you want to just simply mark out higher lows, lower highs, clear market structure, and just execute based on that. Right? And you got people even doing candle wick versus candle body. And again, I have lessons on this in the Trading Encyclopedia, especially how to draw a trend line and what's the point of it, and horizontal versus diagonal trading. Like, I have all this for you, okay? It's not about the trend line, it's about the trend. So just don't trade on a diagonal, use it to mark out a lower high horizontal structure, and you're just going to be much better off in the long run. That's just simple classical charting. This is like probably one of the most important lessons. This is like a top 5, right? Because the whole idea and if you're investing, you don't care. It's based on some other thesis. But if you're trading, you're buying, eventually to sell. And if you want to short, wait for a bounce. If you want to long, wait for a dip. If you tried the opposite, you are just going to get chopped up. What does that mean? Why would you want to wait for a bounce if it's shorting, right? Don't you want to buy there because it's the bottom turning around? No. Most of the time, trends will continue, right? And a bounce in a downtrend is a move against the broader trend. So you want to short a bounce in a downtrend, and you want to take advantage of a dip in an uptrend. You position yourself to ride the broader trend. Moves back to the weekly MA50, moves back to the MA20, like whatever, some type of a dip, a consolidation, and an uptrend often will provide you a nice little entry. So, you want to make sure you set yourself up for success. So just trying to short something like before just going sideways, or even as it's like testing support, it's risky because it could just chop around, sideways. You want to wait for it to bounce, and you fade the bounce. You want to fade these moves against the broader trend. So it's really important to avoid chasing in an uptrend. You just wait for it to dip and give yourself a better chance at avoiding the chop. This is key. This is bankroll management, and I'm writing a book on poker and trading. This is one of their more common, the crossover concepts. But you want to always have cash available, right? Always have funds available for the next candle. Never go all in. And the next candle, the words here, the most important part is the next candle, because you're going to get more information. Next daily close, next 4-hour close. And you want to give yourself wiggle room, maneuverability to adapt and to be flexible. Scaling in is a popular technique. Let's say you want to put in, a $2,000 position size. You buy, 4 $500 tranches. You scale in a little bit at a time. Buy some, see how it reacts. But, buy some more, see how it reacts. You want to be flexible. You want to be agile and nimble as you're entering and exiting your positions, right? Just going up, firing your bullets all at once. What if it dips a little bit lower to the next major support level, like if you're accumulating something or whatever it is? Just don't go all in. Now you have no flexibility. You fired all your bullets. And now you cannot react, right? A flexible trader adapts when they get new information. That's so important. So you want to be able to respond to the market when a really good opportunity presents itself. And if you go all in, you can't do that. And that would be a shame. So always have funds available for the next candle. Deploy your funds in the direction of relative strength. What does relative strength mean? Well, let's say everything's going up, but some stuff is going up more than other things. Um, some stuff is holding higher lows while it's consolidating, and other stuff is not. Relative strength means strength relative to the other market participants, in that arena, right? You don't want to compare like Bitcoin to I don't know, some oil company or something. Like just different things. I mean, I don't know if that's a great example, but you could compare Bitcoin to Ethereum. You could compare, Solana, to AVAX or whatever, right? Don't come at me with that analogy, but just you can compare altcoins one to another. And the point of relative strength is strength relative to the other participants. And you want to study the stronger charts. You want to prepare and curate your watch list, 10, 15 plays, the strongest charts. And again, like I said earlier, waiting for them to dip. Don't get too hung up. Oh, why is this so strong? This shouldn't be strong. It's not your choice. You don't decide. Like the markets didn't decide. Just follow relative strength. That's the chart that's strong. You want to follow that one and wait for it to dip. Who cares why it's running? Who cares the technology? Who cares, the fundamentals? Just there's so many charts to play. Give yourself the best chance for success and play the ones with relative strength. Weak charts will likely remain weak. And if they start to bounce, that's probably a short opportunity because it's a move against the trend. This is a tough one, right? Can you admit when you're wrong? I mean, it's important for relationships. It's certainly important for trading because trading is like successful. Key word here, successful relationships. Admitting you are wrong is critical to long-term survival. If you can't admit you're wrong while you're trading, you're going to ride that sucker all the way down. You're going to have no funds left. You're going to capitulate when you're down 95%, 99%. And it's going to be miserable. You're going to give up, and that's no good. So you want to be, quick to accept when the early results do not match your initial expectations. Vis-a-vis this idea I had just didn't play out. I really thought it was going to hold here. I was all about it. I was unbelievably convinced, and then it didn't hold. Okay, I was wrong. I'm going to move on. If you say, no, 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 I'm just going to wait. I don't care if I'm down 30%. I'm just going to keep holding. Now you're just holding on to a failed idea, and trends tend to continue. So it's just like relationships. You have to navigate it carefully, and you have to admit you're wrong so you can readjust, readapt your course. You have to admit when you're wrong. Right? This stubbornness and denial will not serve you well as a trader or as a lover in a relationship. So just learn how to admit you're wrong, adapt, and move on, right? There's always another trade and the relationship. There are always more days that you're going to be in the relationship, so just make it work. Trading, and this is true, trading and these two can go together. Trading is all about survival. It really is. So remember the long game and don't get too cocky. You know, it's really easy to feel invincible, right? After a good trade, after you nail it, after you really nail it. Oh man, I got it. I did it. I figured it out. I can print money now. I can do whatever I want. And that's a very dangerous feeling because when you start to get overconfident, you let your guard down, right? You rush too quickly into the next trade because you're overestimating your abilities. And when you do that, you're risking your bankroll. It's completely unnecessary, right? Trading is survival. There's big ups, there's big downs, there's major volatility, there's liquidity issues, and there's only so much you can do. Focus on that. Focus on what you can do, which is managing your risk, which is defining all your trading ideas, which is using the trading journal, learning from mistakes, learning from winners, and keeping your guard up at all times. Always have your guard up. Always defending yourself at all times. and especially after a big win, because the tendency after the big win is to let your guard down. Don't do it. Okay? Now, the more complicated your trading system, the easier it is for you to make a mistake while executing it. Keep it simple, stupid. Now, I'm stupid. I'm the stupid one, right? This is all me talking to myself. Every quote is me talking to myself, so don't get offended. But this is very true. KISS, right? And it's in business, it's in everything. And there's a progression of with traders where they start out, and a lot of times they just keep adding indicators because they think, oh, they'll watch a video in like the MACD. For example, no disrespect to MACD enjoyers or whatever, but they'll say, oh, all I got to do is add the MACD, and now every time it crosses in the 4 hour, I'm good. But, then it starts to not work out because they're misreading the chart, or it only works sometimes. Then they think, well, wait a minute, if I just add the MACD with the EMA 8, and then that's not working out. And then they add this, stochastics RSI. Now they're adding Williams. Now they're adding all this stuff. And they're trying to figure out the perfect combination for trade identification. They're desperate to because it's just not working out, right? But the longer you go, you learn it's really just a simple strategy. I've got to tell you, if it's an uptrend, it will hold support, right? It will break resistance. The price will either break resistance or not. And it just comes down to that. So you can really you don't even really, my method is arguably complicated, but it used to be way more complicated. I don't even really use indicators or oscillators anymore. I just look at the price. I look at volume, a couple moving averages, but not too much. I found a method that works for me. And you really can just focus on market structure and use that as your guide. It either holds support or it does not. Like, why overcomplicate it? And you can manage your risk on that. The price is holding support. Good, I'm in it. It doesn't hold support. I'm out, right? You don't need 7 different indicators to do that. So study closely what the price is doing in relation to support and resistance. Leave those indicators back on the drawing board, okay? Just make things easier for yourself and opt for a simpler method. That is my favorite quotes from the Trading Quotes. I'm really proud of this book. I published it in 2022, doing the whole thing for free. That's my favorite quotes from the second quarter. And then for the next video, and this is again going into the Trading Quotes playlist, I'll do weeks 27 and 28, and then I'll, so on and so forth. I'll eventually have the whole book for you for free. I really hope you're enjoying it. I believe there's a lot of great value in these. I enjoy doing them. I really enjoy doing content. You've got to check out Trading Encyclopedia, right? 3-minute videos. I've got hundreds of them now, teaching you all sorts of stuff. Weird academic terms you see me tweeting out, other people tweeting out. I've got a 3-minute video for you on every topic to help explain it. So take advantage of that. Check out the interviews. And then, of course, I'm on Twitter at BigCheds and Bitcoin Live, where I'm a founding analyst. So we'll finish it up, of course, with a little bit of dancing, Church of 8 Wheels. And I will say again, folks, thank you so much for being here, and let's do it. Thank you, everybody. Big Cheds out. Peace.